In this video, I'm just going over my top 3 reversal signals on the crypto charts. And the first one I'm going to go over is engulfing pattern. An engulfing pattern can be either bullish or bearish, okay? And it is a 2 candlestick formation, which means this pattern is only validated after the second candle has closed. Another example of an engulfing pattern, the previous one was a bullish engulfing pattern. Right now, this is a bearish engulfing pattern, and you can see right here where I just deleted the circle from. We have the bearish candle. Engulfing the previous bullish candle, right? And you can see this bearish candle completely outdone everything this bullish candle did to the left of it, right? And as you can see, this occurred at previous resistance at a lower high in this downtrend, okay? Like I said, with all those confluences, making sure you take these engulfing candles only at structure points, you're going to find that they're much more powerful, because engulfing candles occur a lot on the charts, right? Sometimes when they occur like mid-trend or mid-range, they tend to just be less reliable, and I consider them interesting candle formation, right? But I would say this: the only time you could use an engulfing candle like that is not really at a structure level, and this is more for your advanced traders, is when it's in the current direction of the market, right? An example of that would be kind of right here, right? Or right here, right? You see we're not really at resistance or at the lower high, but you can see price pushed up, and then this engulfing candle printed, and we can see price continuing down, right? And that, at this point, this engulfing candle was just signifying that the momentum was back in the direction of the flow of the market, right? If you want more on how to identify market direction and the flow of the market, there's a link in the description on the video that really goes over that topic. You should check it out, okay? And a reason why I believe that engulfing candles are very powerful is simply because they signify some sort of structure break on lower time frame, okay? I'm gonna show you why that's true, okay? So let me find an engulfing pattern for you guys right quick. A valid one could be, okay, yeah, so let's revisit the one that I previously went over. And so what I'm gonna do is I'm gonna draw a line right here. Basically shows, you see it highlights where this candle overdone or basically broke below or closed below the previous bullish candle to the left, okay? So remember this line, remember that this highlight level. So let's drop on the 1 hour and lower time frame to show you how structure has been broken. Drop on a lower time frame, 15-minute. Okay, so quickly we can see there was a higher low right here, right? We have higher low, higher high, higher high, right? Price made a lower high, and right here you can see price made a lower low. Price made the lower low and created a lower high, right? So what we have there is we have a structure break, because this close below structure to the left, and we also have confirmation of the bearish trend by this formation of a lower high after the most recent structure break, right? And if you don't know, what you would find out if you click the link in the description is how that signifies a clear structure or trend reversal. So like I said, check the link in the description. Let's get to the next top reversal signal of the second reversal candlestick formations that I like to take advantage of when I see them are called bullish and bearish variations. Now, a bullish variation and bearish variation is a multi-candle setup. Okay, it's usually about 35 candlesticks to form this candlestick formation, right? Essentially, it's all just another rendition of an engulfing candlestick formation, right? Which means everything I said about an engulfing candlestick in the previous step applies here as well, right? As far as rules wise, right? Which means they must be taken off of market structure levels such as support and resistance, higher lows, lower highs, lower lows, higher highs. Okay, so let's hop in the charts. Let me show you how to identify them and give you some examples of how powerful they are. So right off the bat, we're on XRP. As you can see highlighted here, green circle is an example of a bullish variation candlestick formation, right? First criteria, like I said, it is off of structure. This is higher low point, also can be considered support, also can be considered off of a trend line. Okay, so it's hitting about 3 to 4 confluences at once, right? But now I know you guys are probably looking at this and saying, oh, that's a morning star. Correct, but I don't really call these morning stars because I just call them a bullish variation, like I said, because they're still technically engulfing candlestick formations, and I'll show you exactly why I said it right now. So an example of this would be right here. You see on the 15-minute, right, we have a a bearish variation right here, right? We see this bullish push to the upside and these two bearish candlesticks pushing and basically engulfing this price action to the left, right? So this can be seen as a 1 2 3 4 candlestick formation, or a three stick candlestick formation if you want to just include this bullish push to the upside. Nonetheless, it signified a reversal signal at resistance and price turned over to the downside. So to show where this would look like a engulfing candle as well, we would go on a 30-minute, and you can see this price action right here engulfed the price action to the left, right? Now, it should be known that usually I don't like to take, well, I don't really it depends on how big of the wick it is on the close of the engulfing stick candlestick formations, but because sometimes a wick can signal a push up to the upside, and as you can see, when this candlestick closed, we did get some sort of push right here. Okay, but yeah, that's one. So let me highlight some of these variations and show you how powerful they can be. So bang, like I said, this is one here on the 4 hour. We see price basically outdid this move to the left. After that occurred, we see price pushed to the upside. Mind you, price didn't have the immediate impulsive move that we usually look for, but it can be noted that after we got that signal, let's say if you use the enter right about here, put your stops below here, putting price to the nearest zone, even though price continued to move sideways for a while, it never fell below support or structure, right? And if anything, we was able to get another example of a bullish variation off of support right here to the right, which would allow us to get another entry, right? After seeing that print on the 4 hour, I would hop on a lower time frame and look for some. You can either enter straight off of that, or look for some bearish, some entry reason. So you would have seen that, and then come on a lower time frame, then you could have possibly entered around here, put your stops once again below there, gain another entry. And as you can see, the bullish engulfing candle printed right here. You could have taken that entry and just eat. So these reversal pattern signals are amazing. The third candlestick pattern reversal signal that I tend to look out for is called the head and shoulder pattern. This pattern, it can be considered, for the bullish scenario, it's called an inverted head and shoulder pattern, and for the bearish scenario, it is the regular head and shoulders. Okay, now same rules kind of apply that I had for the engulfing candle and for the variation candlestick formations, whereas to say these should always be taken off of market structure levels such as lower highs, higher lows, resistance, supports. You're always going to hear me say that, because taking your entry reasons or drawing the market direction off of these zones, you have a higher probability of winning your trades. Okay, and these are quite rare. When I say that, I mean that you won't be seeing these as frequently as you would see engulfing candles and or variations, right? So when you see them, make sure you're analyzing them correctly. You don't try to anticipate it forming and then so you try to get them before. Sometimes you may win off of doing that, but if you was to take 10 trades in that form of fashion, you probably won't come out profitable. The reason why these head and shoulder patterns are so powerful, and if you're thinking because it signifies a structure break, you are correct. You've been paying attention, right? Head and shoulder patterns usually signal that structure is breaking on the lower time frame, even on the time frame that it's forming on. All right, so let's go on the chart and let's start identifying them. Right here on the 4 hour time frame, you can see right here on BNB, we have a beautiful inverted head and shoulder pattern taking place off of support, pushing to the upside. Right now, if you're taking this is my experience, if you're taking a inverted head and shoulder pattern on a downtrend on a lower low, this means that you're probably about to enter a counter trend phase of that downtrend, which is okay, especially if you take one off of a higher time frame such as the 4 hour and above. You might see some substantial profit, right? But since I'm a trend trader, I tend to take the regular head and shoulder patterns in a downtrend, because that means that's forming at a lower high. Okay, but there's nothing wrong with taking it off of a counter trend as well. Just know what type of play that you're in. That's all I'm saying. So see, we see this form on the 4-hour time frame, right? We see this inverted head and shoulder form, and the way you can identify it is you have a left shoulder, a head, and a right shoulder. Okay, and the only time you can say this is valid is when price starts to break this neckline. Okay, now once you see that happening, the rules are that you should wait. There's nothing wrong with that, right? That is the higher probability, less risky setup, right? But as you can see, a lot of those tend to happen where once it breaks the neckline, it pushes. So what I would suggest is, or the way I would take it when those scenarios are approaching, is when I see it's breaking the neckline, I would then drop to the lower time frame, because in the lower time frame we are getting those retracements. Okay, so I was on the 4-hour, hop on the 15-minute, see if I can show you an entry reason that I would have taken. And as you can see right about here, so we broke the neckline. See, we broke the neckline, which is right here, and then we pushed, right? And then the entry signal could have been somewhere around here, right? And as you can see, wham bam bam, we have a bullish variation, right? See, push, retrace some, price found some support, bullish variation formed off support, entry, stops below the low, push to the next zone, wham bam, you just won a 2.7 risk to reward ratio trade. You see what I'm saying? It's easy just like that. Well, I don't say it's easy, but when you have your rules and you know what you're looking for, that's how you can take advantage of the market and extract profit. So if you enjoyed this video, smash the like button. Definitely subscribe if you're new. Stick around for the next one.